Jeff Killian, Chief Market Strategist for the Inside Technician. Live trade 12/26/2012. The time is approximately 10:17 a.m. Eastern Standard Time. First and foremostly reviewing the daily charts in real time, trading at 14/22/25, mark to the market right now. Trendline break on Chaikin indicated the smart money sell-off confirmed. Money flow as well, shorter time frame period, confirmed. Market short. Volume came on. Traded above 21 period average daily volume on 12/18. Preceded equities sell-off volume on the 21st. 2,400,000, almost 2,500,000 contracts. Stochastics momentum. Cross from above to below here, just after hitting the oversold 80 level. Overall, U.S. market view is short, level 7 to the downside. All quiet. Moving into real-time charts. Real-time charts only now, in right here. What we've been waiting for. 14/21/75 level on increased volume, breaking support level as established by these 1-minute prices in the trade. Looking to get at a minimum 14/20/25. Next level to the downside is 14/19/50. Equities market has been open 49 minutes. This smart money methodology developed by myself somewhat 17 years ago is designed to find, track, and trade the largest institutions, insiders within the market, people who control the stock prices, control futures prices, control the U.S. markets to be able to capitalize, fade those moves, but only when we are sure we have everything lined up. Let's take a look at the 15-minute indicators, how they were set up before. EMAs had crossed in the last 15-minute bar, signaling go situation on 10:15 a.m. bar. Here was the condition of the Chaikin money flow just minutes before the trade was now taken. Substantial negative divergence here as compared to inflated highs. This large range 15-minute bar clearly showed me that prices were looking for direction. The overall bias was to the downside because of the call on U.S. market sell-off in play. We're still moving to the downside to confirm the short move. MACD cross from above to below right here, 10:15 a.m. bar, signaling go situation. We originally thought that the equities on opening 931, 92, 923 area would have provided a lot of volume, but we knew it was just a matter of time. And so we had to wait and let this trade come to us. Stochastics momentum cross here, evident difference in the indicator ranges here, compared to the prices at the highest peak within that area, right here. And again, here's your inflated high, secondary, last try at this point. Everything that we were looking at on this end pictured substantial weakness within the chart pattern as compared to the indicators. Still moving down in the money on the trade. 1421.75 on high at the bar. 1421.75 was the entry point. Market to market real time trading now 1421 flat. All quiet environment. Now, as the trade progresses, we will continue to monitor the 15-minute charts. As you can see, we scroll through them. One thing I'd like to point out here is that with the most recent application of the Fibonacci ratios here, with the overall bias now being short on U.S. markets, we connected the lower area here at around this area, and the higher area from 1116 all the way up to 1218, leaving us to levels that prices had actually hit on the way up. This is no coincidence. Broadcasted out into the future, leave clear levels that prices will be magnetized to on the way down. Now, when these levels on the way down hit these ratios that are laid out, for example, 38.2, 50, where the low on this large move on 1220 took place at the 8:45 a.m. bar. It's clear with the probe to the low side here at this level at 50%, and the overall U.S. daily market bias call being 7 short. The opportunities are largely in our favor to trade short the S&P E-minis. On this trade, it is possible that prices could get down on an afternoon sell-off as far as possibly even 410. Historically, after this type of volume comes in on a daily chart on the equity side, now to push the futures down, where the futures sold off early, Dow, S&P 500 equities, and futures all kicked in sell signals within a few days of each other. It would allow us the opportunity to trade more contracts because of the market bias now integrated with the 15-minute chart set up for the trade to take a larger position and a much higher probability trade when the overall tide of the market and the 15-minute charts is on our side. What's interesting about this trade is that we have a series of levels on a 1-minute chart that we are looking at. And right now, as prices continue to trade down, since we entered the trade here at 1421.75, more volume, as in this case here, at the 10:26 a.m. bar, we are clearly in a situation where more volume is contributing to the continued down move, looking to get to a price profit target. Okay, a minimum, a bare minimum of 1419.50 right here. So let's go ahead and change that. This will be the incremental level where prices may find some temporary support, continue to trade down on more volume, and we'll mark this in red so it can be more evident, clearly seen. Mark to the market trading at 1420.75. Holding 1420.75. Let's go back and take a look at some of the 15-minute indicators to see the additional confirmations in their movement to the downside. Now on a 15-minute chart, we've already punched through this level here as outlined by these prices right here. Okay, hit it right now at 1420.75 again for the 10:30 a.m. 15-minute bar, which will end in approximately 2 minutes. Money flow index clearly dumped here, small move up on inflated highs, dump here, a turnaround and another dump again, a additional confirmation to short the trade. EMA is again crossed right here at the 10:15 a.m. bar, approximately 10:07, 10:06 a.m. Eastern Time. Money flow on the check-in side is continuing to bottom out after the substantial negative divergence we talked about a few minutes ago. A great additional confirmation as the smart money has left before the prices have fell. Prices will trade in levels. 1419.50 here is laid out on the 15-minute chart. Is very close to 1419.50 as we laid out on the 1-minute chart. 15-minute chart's giving us the approximate 1-minute levels. Here, again, another level established by these prices and this here. Let's tighten that up. Good enough. 1417.67. We'll make it 1417.50. This recording will run as long as it needs to in order for us to get to our initial price profit target. Established here, 1419, 1419.15. The damage has already been done here by the smart money trading out ahead of time. Prices will have to follow the indicators. The MACD on the 15-minute chart is cross, signaling the official change in trend to the downside. Longer-term indicator. Every one of the indicators that we're viewing here all has certain parameters attached to them. The S&P 500 equities moving in the same direction. The futures, obviously, indicating the overall trend on the 15-minute charts has changed to the downside. We are a 15-minute chart bias level short at a 7 as we speak. Small up correction here after volume came in here to push the prices through the entry point. I would not be surprised if shortly we saw some volume come in for another 7,000 contracts within a 1-minute chart to go ahead and push these prices down to the next levels we're looking for to the downside. Mark to the market 1421.25, 1421.25. Mark to the market 1421. Moving down. $14.20.50. Continuing the move to the downside, very close to the initial incremental support level 8 at 14.20.25 right here, as identified by the close on 12:26 of the 6:03 a.m. bar. Very close. Again, would not be surprised if 7,000 contracts traded in within a 1-minute period to push the prices down to the price profit target level at about 14.19.50, 14.19 area. Once again, 1-minute chart levels for support, resistance, price profit targets on the way down or up are always determined by the exact prices on the 1-minute chart. The 15-minute charts are laying out the levels in advance. Approximated preferred levels for support, resistance, in this case support to the downside. Looking to see how prices react at those levels and continue to trade to the downside. We have not gotten the early morning sell-off that we expected. We expected a much larger move earlier this morning. We feel at this time, because of the holiday season and a lack of participation in the markets, this is the reason why prices are moving down much slower than any other type of period in time. Most people are still away from trading. We are not. We're obviously sending out the reports on the market, nightly market intelligence report on the 23rd and the 25th. 23rd's report was calling that the market sell-off is imminent. And of course, last night's report was very clear that, okay, now we're reaching the initial incremental level here for price support at 14.20.25. Excellent. We're there. The nightly market intelligence report called on the 25th, last night, for today's trading, that the market was sure to sell off, and a major U.S. sell-off is in play. So what this basically means is that if the overall market bias, we've changed from long to market net neutral, okay, in cash, then immediately, as soon as we are sure, going short. Those of you that are only trading long, need to get a whole new perspective on trading and learn how to trade short. And because the volatility of the market, because of the current situation in the government, and not having the leadership that's necessary in order to be able to get us out of fiscal debt and all the scenarios that are associated with that, okay, are providing the opportunities for us to make money short. And much faster. Prices fall faster than they move up the majority of the time because of the panic, greed, and fear within the marketplace. Once again, for those of you who are interested to learn how to time the market, expert market timing course is available on the website at theinsidetechnician.com. 3 words run together, theinsidetechnician.com. And the S&P 500 Mini Elite Trader Training course is available both at a fraction of the original costs as they were administered online directly and only by myself. Very comprehensive. Okay, we've crossed through. This is what we were waiting for here. I'd like to see some more volume come in. And we're reaching the price profit target shortly here at 14.1950. The question would be to get out of the trade or stay in the trade. $14.2175 in the entry, confirmed. Cut the sheet. Yeah. 14.2175 confirmed. 14.1950 confirmed. $2.25 gain. Less the spread 1.75, not enough. 30 contracts confirmed. This would be the area that we would like to see more volume come in on the 1-minute chart. 10:39 a.m. Eastern, 3,965 contracts. Next level on the 15-minute charts, 14.1950 to the downside. Right here at 14.19, picking up another half a point. Preferred exit would be here at 14.1750. Where the low has traded down to this point, right here. There is possibilities that we could hit 14.19. 1-minute chart at this point. Trading back up to the crossover point at 14.2025. The volume that's come in here, we don't believe at this time is sufficient volume to push the prices in a big way to the upside. Mark to the market 14.20 flat. 141975. 141975. Confirmed. All quiet environment. The date is 10/26/2012. Time is 10:42 a.m. Eastern Standard Time. Personal trading platform clock set off the Eastern Standard Time zone and not Globex futures to see the instant relationship of the time and date stamps between real-time equities and futures. $14.25 confirmed. Let's go back, take a look at 15-minute charts. Money flow short term still moving down. Very small amount of money coming in. Try and support the prices. It will more than likely hit this level here at 14.19, even on the 15-minute chart. But the majority of the money has already left. MACD is still short, momentum continuing to the downside. Here, stochastics continuing to the downside. Using the weight of the 15-minute intraday time frame charts to manage the trade. Whole quiet environment. Mark to the market 14.20, even. Light volume on holiday trading. And back here at 14.21.75, right here, exactly, at the 10:19 a.m. bar, 10:19 a.m. Eastern Standard Time. Managing the trade, mark to the market 14.20, lasts. Back to the 15-minute charts. EMAs had crossed way back here, 10:15 a.m. bar, approximately 10:06 to 10:07 a.m. Eastern. MACD shows more momentum to the downside. Disparity becomes wider between the MACD and the signal line, proving out a larger bias to the downside. Keep categoric level at short 7 by the smart money trading methodology. This is Jeff Killian, Chief Market Strategist for the InsideTechnician.com, recording a real-time trade taken today, 12/26/2012, and at 10:19 a.m. Eastern Standard Time on a short, the S&P 500 E-mini futures. 15-minute chart is up, managing the trade as we continue the move to the downside. Okay, we're right back here at 14.1950 right now, looking to get through this level and get down to 14.19. Let's lay it out earlier on the 15-minute charts. Let's just fly that in on the 1 minute. Take a look at that. Would like to see some more volume come in here, 7,000 contracts, 10,000 contracts, to drive the prices down to the 14.19 level and get out on a rally. Lock in a profit, 30 contracts, and walk. Here we go. Probe is there at the level at 14.1950. Looking for price to continue to the downside. Short trade. One-minute bar closing shortly. Mark to the market trading at 14.1925. New 1-minute bar is now open at 14.1925. Holding at 14.1925. Holding at 14.1925, confirmed. $14.1925, confirmed. Looking for 14.19. Back to the 15-minute charts. Small amount coming in. Support price is probably at the 14.19 level. We're looking to get out at that level on a rally, and we're just about there. 14.19. For all of those who are with me overseas, in the States, this is the first time I have revealed this methodology in real time. I've recorded this for the serious trader to understand a few of the mechanics behind this methodology and why. It is the preferred methodology to trade in today's marketplace. All quiet, trading 14.1950. Our live trading laboratory with suggested smart money bias trading calls will be available in February for those of you who are serious. That trading room with these live charts will be open approximately 15 hours a day. available to you to follow along. Use this as confirmation for your higher probability trading. Institutional traders, the lines will be open. However, when we are looking for the in and the out, we are in an all-quiet environment, and we will respect that until the trade is closed out and the numbers are rolled up. Whether you're able to enter the room or not, when the trading calls are actually suggested, these smart money bias calls, to enter and exit the trades, you'll be notified by email, text, whatever fields you sign off in on the agreement. Mark to the market, 14.19.25. Here we are at 14.19, looking to get out. Confirming the fill. 14.19 on the low for the 1 minute bar. We are filled. 14.19 even. Okay. 14.19 even was the fill for the trade. 14.19 even. 14.21.75 on the in. 14.19 even on the out. It's a move of 2.75 points with a net gain of 2.25 points times the 30 contracts that were traded. Confirming. Confirming. 14.21.75. 14.19 out even. 2.75 points, correct? Yes. Net 2.25. 30 contracts. 82.50. This is a perfect example of how we prefer to get out, teach how to get out, call how to get out on a rally. Most of the time when these 15-minute levels are hit, if we don't have substantial volume coming in at that time or shortly thereafter, prices will trade up again and, historically speaking, give back quite a bit of a profit that could have been locked in, as we did on this trade. Now, the reason why we're out of this trade is obviously because the volume never came in to continue to trade to the downside. It very well may trade again to the downside. But the sure move was what we had laid out, what we had predicted based on everything we'd already discussed in this video. Yes. Yes. Yeah, it's $112.50 gain on every contract. $112.50 gain on every contract times 30 contracts traded, put on a total net gain on this trade for $3,375.80. And the move continues to the downside because the overall bias call was correct on the right side of the smart money. This is Jeff Killian, Chief Market Strategist for the InsideTechnician.com. All of the institutional traders who are with me today, all of the new traders that are with me today, my pleasure to present to you, for those of you who are still in this trade, congratulations. Once again, the Nightly Market Intelligence Report is there for you every night. The courses are available on the site, and in February, the live trading lab with the smart money suggested bias calls, whether short or long, on the S&P 500 E-mini futures in real time. Thank you for being with me today for this trade.